Hello everyone, welcome back to Royalty Empire Education. And for those who don't know me, my name is Tyrone. In our last two videos, we've been talking about the financials of the company. And if you have not seen those two videos, you can go check it out in our YouTube channel. While those two statements are important to know how to read the financials of the company, you need this one last statement in order to be successful. It is called the cash flow statement. So today I'm going to talk about what is the cash flow statement and how it is beneficial for you to know this statement. What is the cash flow statement? This statement shows you the actual cash flow that is going in and out of the company. This is different from income statement. Income statement shows you the sales even before you get the cash. But the cash flow statement shows you the actual cash received to the company. The cash flow statement is divided into three sections. We have the cash flow from operations, investing, and financing. The cash flow from operations is the day-to-day business operations. In these daily operations, we have the direct method and the indirect method. The direct method is the total amount of operating cash income. But in order to get the indirect method, you need to adjust by putting in the additions to the cash. After looking at that section, we will look at the cash flow from investing. The investing sector shows us the company spending in order to grow. The company does not only make money by selling their products, but also make money through their investing. We have to put in the capital expenditures, which is the buying and fixing of properties. Under that, it would have the property, plants, and equipment costs. Plus, the business acquisitions, which is when the business buys another business. Plus, the stock purchases that the money has made. There are times where the sales of equipment will be present if they are making money off of selling their investment. At the very bottom, you can see the total of the cash from investing. The final section of the cash flow statement is the cash flow from financing. This section tells us how the business pays itself in order for the business to survive. It has the issuance and payment of debt or equity and payment of dividends, which is the company either receives or spends for itself. After all these sections, the cash flow statement ends by showing the net cash flow that the company either gained or spent as a whole. Below that, it shows the cash flow from the prior year end to the current year end. All these things that I just listed for you can be expected from the cash flow statement of the company. The cash flow statement is the last thing that I looked at when I was checking for the right companies. This is important because it showed me the true cash flow that is going in and out of the company. Looking at the cash flow, it benefited me in a lot of ways. Now that we know what the cash flow statement is, we will look at some benefits of knowing this statement. What are some benefits of knowing the cash flow statement? The cash flow statement has a lot of benefits. One of those benefits is that you can see the change of the company's cash. This means it can either tell you that it is making a lot of money in its cash flow or it is losing money. Another benefit it can have is that you can see the growth potential of the company. A lot of investors look at the growth potential. It is beneficial to invest in a company that is discounted, but if the potential growth is low, then it would be a waste of time. Sometimes the price does not matter as much as the growth potential. The cash flow statement will show you whether it has enough money to expand, which could translate into growth in the company. The cash flow statement changed the way I look at companies for investment opportunities. I look at their total net cash flow and see if it's positive or negative cash flow. When it has a positive cash flow, I tend to lean into what the company is going to do with that extra cash. They could either expand or keep the money to pay its workers bonuses or benefits. I have become better at analyzing a company because of the cash flow statement. But you cannot use this by itself. Do not forget the two statements that I talked about before this video. Today we covered about what is the cash flow statement of a company and how it is beneficial for you to know this statement. I agree that the cash flow statement is important, but I think that all three statements should be combined in order for you to find the right company. I hope that this helped you whenever you're reading the financials of the company. Subscribe and like if you like what we're doing in helping people to learn more about stocks and investing. And if you have any questions, comment down below and I will gladly answer them for you.